This cycle has been all about Bitcoin. It's been so dominant that people are starting to wonder if we'll even get an alt season at all. Whenever Bitcoin pumps, only a handful of alts manage to follow. But the moment Bitcoin sneezes, the entire altcoin market goes into meltdown mode. Honestly, it's been brutal for altcoin holders. If you're sitting on underwater bags right now, just know you're far from alone. So the million-dollar question is, when does alt season actually arrive? In this video, we're diving deep to uncover the real answer. No hopium-filled takes, no generic Bitcoin dominance chatter. We're going to break down under-the-radar data and run analysis that will probably blow your mind. If that sounds good, smash that like button to support the channel. It really helps me keep bringing you solid, no-nonsense content. And if you haven't subscribed yet, make sure you do so you don't miss out on what's coming next. Let's jump straight in. This cycle has given us just two brief altcoin rallies so far, both in 2024. The first one came in March with the halving hype, and the second during the election buzz in November and December. But let's be honest, if you've lived through previous cycles, these moves probably felt like crumbs. Look back at 2017. That was a real alt season. It lasted almost an entire year, and by the end, the total altcoin market cap had exploded 285x. Bitcoin dominance collapsed from 95% to 35%. That's the kind of run where even GCR would have printed money without needing any Binance insider plays. So the big question is, when do our altcoin bags finally pump? To figure that out, we need to dig into some crucial charts and piece together the macro puzzle. One chart I'm paying extra attention to right now is the dollar index against altcoin market cap, and it might just hold the answer. This chart has a lot of answers if you look closely. On the top half, we have the US dollar index, and on the bottom, the total crypto market cap excluding the top 10 coins, basically representing altcoins. Notice what happens whenever the DXY tops out and starts falling. In 2017 cycle, when the dollar began a sharp downtrend, altcoins pulled off a mind-blowing 285x rally within just a year. Then again in 2021, after DXY peaked, altcoins went on to do a solid 17x in just 12 months. So what's the macro reasoning behind this? A falling DXY simply means the dollar is weakening against other global currencies. This usually happens when the Fed moves from tight monetary policy towards easing, whether that's pausing rate hikes, cutting rates, or starting quantitative easing. When the dollar weakens, global liquidity improves. Money becomes cheaper and risk assets like stocks and crypto thrive. Altcoins benefit even more because capital begins to move down the risk curve. First, it flows into Bitcoin as a safer bet, but once confidence returns and liquidity is abundant, it pours aggressively into altcoins looking for bigger returns. Right now, as you can see, the DXY is approaching key support levels after getting rejected hard from the 109 region. If the dollar breaks below this trend line and enters another macro downtrend, it could open the doors for a massive altcoin rally in the coming months, similar to what we saw in previous cycles. But remember, timing is everything. While macro liquidity acts as the fuel for these rallies, we still need clear confirmation of Fed easing or fresh liquidity injections to sustain such a move. So how do we know when the environment is actually shifting from risk-off to risk-on? While the dollar index tells us about broad liquidity conditions, it doesn't capture market confidence shifts in real time. For that, we turn to one of the most overlooked but powerful indicators, the copper-to-gold ratio. I recently touched upon this hidden indicator that very few people in crypto ever talk about, yet it has consistently signaled some of the biggest market shifts we've seen. This ratio essentially measures how industrial metal copper is performing relative to safe haven gold, acting as a real-time confidence gauge for economic growth. When this ratio rises, it means copper is outperforming gold, which generally happens when markets turn risk-on and investors are betting on economic growth. But when the ratio starts dropping and gold outperforms copper, it indicates fear is creeping in and capital is moving towards safety. Right now, this ratio has just bounced from a multi-year bottom and is starting to push above its 20-week EMA. At first glance, it might not seem like a big deal, but historically, this kind of breakout has marked the beginning of massive Bitcoin and altcoin rallies. Back in 2016, copper was recovering from a brutal bear market. As the copper-to-gold ratio began its uptrend, altcoins exploded. The total altcoin market cap surged from just 300 million to 86 billion as ICO mania kicked in, and nearly every token was going parabolic. The crazy part is, you didn't even need to catch the exact bottom. Even if you bought after that major spike above the 20-week EMA in November 2016, you would have still caught the entire bull run that followed. We saw an almost identical pattern play out in 2020. As global economies reopened after lockdowns, copper prices soared and the copper-gold ratio broke out sharply. Bitcoin reacted by ripping from 5,000 to nearly 69,000. Again, just like in 2016, the copper-gold ratio printed a huge spike above its 20-week EMA before the real rally began. And at the time, Bitcoin was only around 18,000, not far from the cycle bottom of 15,500. Even if you ignored all the risky low-cap coins and just rotated into the large caps, the gains were insane. For example, ETH was sitting at 550, Cardano was at 14 cents, and BNB was trading around 30. From there, ETH did a 9x, Cardano saw 22x, and BNB ripped 23x to their all-time highs. And remember, these were just the top 10 coins. Smaller altcoins were minting life-changing gains for countless investors who had positioned early. While I'm not expecting returns to be as extreme this time, even a moderate alt season could deliver impressive gains. This indicator continues to fly under the radar, but if history is any guide, its recent breakout could be foreshadowing another powerful move across crypto. This correlation isn't about catching exact tops and bottoms. It's more about understanding directional bias in the market. When the copper-to-gold ratio is rising, it tells us that investors are feeling confident to take risks. And in those conditions, Bitcoin, being a speculative asset, often performs exceptionally well, but the reverse also holds true. Back in 2018 and again in 2022, when this ratio started rolling over, Bitcoin saw sharp declines. These weren't just random corrections. They happened alongside broader fears of slowing growth and tightening financial conditions. Now, looking at where we stand in mid-2025, after a long grinding decline through 2023 and 2024, this ratio has dropped to levels we haven't seen since the COVID crash. That kind of extreme pessimism often shows up near macro bottoms. It doesn't guarantee an immediate reversal, but historically, such lows have preceded strong rallies. I'll be keeping a close eye on this ratio and watching for that sharp spike that typically marks a shift towards risk-on sentiment. You can track it yourself on TradingView by overlaying the copper-to-gold ratio indicator to stay updated. Or, if you prefer quick updates, just follow us on X, where we post regularly whenever there's a trigger worth your attention. But macro triggers alone aren't enough. Within crypto, one final piece has to click into place for Altseason to truly ignite. That is ETH outperforming Bitcoin. And here is why this is so critical. ETH is the backbone of the entire altcoin ecosystem. It commands over 50% of the total value locked across all blockchain networks, making it the primary liquidity engine for altcoins. When ETH starts to outperform BTC, it signals growing confidence across the market. And that confidence flows down into smaller projects, sparking the explosive rallies we all associate with Altseason. Just last quarter, ETH outperformed BTC for the first time since late 2022, posting a 36% gain compared to Bitcoin's 29%. That's a significant shift in momentum. Since May 2025, spot ETH ETFs have attracted over $2 billion in inflows, highlighting strong and growing institutional interest. After spending years lagging behind Bitcoin, ETH's renewed strength can genuinely be a game-changer for the entire market. A strong rally in ETH fuels liquidity across the altcoin space, creating a ripple effect that lifts countless other tokens with it. Without ETH leading the charge, the momentum needed for a proper alt season simply isn't there, and the broader market misses out on its biggest catalyst. So when do I personally expect alt season to kick in? Before thinking about timelines, it's critical to understand what truly triggers an alt season. It all boils down to a clear shift towards a risk-on environment. For that to happen, we need the dollar to weaken further and the Fed to start easing policy. A falling dollar signals easier monetary conditions, abundant liquidity, and rising investor risk appetite. But right now, the Fed remains cautious. They've repeatedly stated that meaningful rate cuts will only come if the labor market softens further. However, the latest data shows unemployment ticking up to 4.1%, which is still relatively tight. If it remains sticky here, the Fed might keep rates elevated longer, capping any breakout rally and fueling more chop that bleeds altcoins. At the moment, Bitcoin dominance is holding strong, and I wouldn't be surprised to see it push towards 70% before rolling over. Historically, dominance peaks just before altcoins start running. The dollar has started to slide, but with rates still high, we remain in a fragile macro balance. Markets are currently pricing in a 25 basis point rate cut in September, which could fuel the classic October rally. Post-halving year Q4 has always been strong for altcoins, and I expect this year to echo that pattern. In the last cycle, ETH and the broader altcoin market massively outperformed Bitcoin in Q4 2021 as liquidity conditions eased and market sentiment flipped. But remember, timing is everything. Until we see the dollar break down decisively alongside a sharp spike in the copper-to-gold ratio, altcoins will struggle to sustain any major rally. Bitcoin remains the safer bet in this environment, But once the macro pieces align, rotating into altcoins at the right moment can capture the highest upside in the market. Personally, I expect a choppy August and September for altcoins, with Bitcoin dominance continuing to grind higher. Following a potential October rally, we could see sentiment shift as rate cuts gain traction and liquidity returns, setting the stage for altcoins to regain momentum into late Q4. I'd love to know when you expect alt season to kick off and what altcoins you're betting on this cycle. Drop your thoughts below and let's see who nails the timing this year. Thanks for watching, and I'll see you in the next one.